So unemployment levels have risen to the highest they've been in 4 years. What does this hold in the future, I guess, for rate cuts and homeowners?
35,000 people now unemployed compared to this time last year.
Yeah.
So there's 30 to 35,000 less people who have access to money, and that's liquidity in the market.
Anything that they implement today won't take effect for months.
Yeah.
You know, the CBD, Sydney CBD, there's more homes listed at over 15 mil than there is listed at under 800K. Consumer confidence apparently has dropped to the lowest level in 6 months as well, leading into Christmas.
Yeah.
Never a good thing.
Which it's not surprising, really. We're talking about, obviously, the unemployment figures, but then we're going to discuss the top end of the market because there's 150 homes to sale over the $15 million mark in Sydney. Which is crazy. And then we're talking about building completion rates moving forward.
Yep. So we'll get straight into it. The biggest news that have literally come out this week is that unemployment figures have come through and they are jumping. It's as simple as that. So when the RBA looks at cutting rates, it's not just based on inflation, which is what a lot of people base it on. Inflation's come down, we're sweet.
Yeah.
A lot also hinges on unemployment. And if business or access to business finance and businesses, if it's too costly to run, i.e. finance, they won't hire. They'll freeze their employment. And in a lot of cases, they actually downsize their staffing levels as well, which is what we're seeing.
Yeah.
So I think the RBA has a big job ahead of them for their next rate cut.
Yeah.
I know that the current RBA, they're very firm, and I think that's part of their strategy is this media-based or this media-faced, like, we are not going to cut rate, you know, that's her style. Whether that's working or not, I'm not sure, but these are some figures that you cannot ignore.
Well, you know, it's obviously one of the many metrics that they look at, but when you look at it, it's what is it, say 35,000 people now unemployed compared to this time last year.
Yeah.
So there's 30 to 35,000 less people who have access to money, and that's liquidity in the market. And that liquidity, although that it's, you know, not all 30 to 35,000 of those people are getting mortgages, there might be a third of those people who might take out mortgages.
Yeah.
So it is a significant amount of, you know, not only mortgages that aren't being taken out, but also that flow-on effect of, you know, stamp duty and all of the service providers like myself and yourself within the industry, that starts to take an effect on. So there's you know, bigger effects, and then they're going to need to stimulate the market with, you know, one of the levers is obviously interest rates.
100%. And another thing that's sort of popped up as well is that the amount of job postings on Indeed and Seek has dropped significantly as well in September.
Okay.
So that's then going to have another flow on going forward. So these are all things that are making a big difference. And construction sector was one of the ones apparently that has dropped quite a lot, which we're going to talk about later in this podcast. Consumer confidence apparently has dropped to the lowest level in 6 months as well, leading into Christmas.
Yeah.
Never a good thing.
Which it's not surprising, really.
Yeah.
Like, you know, with all of the economic forecasts that have been out there from the economists, but then the RBA, you know, coming out saying that they're dropping rates and then they put rates on hold, it doesn't give people much confidence at all.
I think at the level that they've come down to, and then for the RBA to come out and say, that's it, we're done, I think that has had a negative effect in the market.
Absolutely.
I think people expected it to come down a lot more than what it has.
Yeah.
And I think it's obvious that it should come down more than it has.
Yeah.
So hold that space.
Which is why the government moved forward the first home buyer policies.
Well, which isn't helping at all either.
Yeah.
So there's a lot to it. In my opinion, I think, you know, whether they do that or not coming into Christmas, I'm not sure. I'm not an expert in this. I think the big four banks are still saying that's most likely to be February, not December.
Well, that's the thing. We spoke about the interest rates, how they weren't going to make a decision based on that monthly data. They were waiting for their quarterly data. So maybe we do need quarterly data for high or significant rise in unemployment for them to make a decision on interest rates.
Yeah. And you've got to remember as well, like anything that they implement today won't take effect for months.
Yeah.
You know, it's at least a 3-month period before any of these things start to wash out.
And that's the thing.
So
we're already
it's
2 weeks in. We're 2 weeks into that first home buyer policy.
Yep.
wait and see what happens with that over the next month or two.
Yeah,
but we'll do an episode.
We'll definitely chat
what
about that
effect it's had.
So on the other flip side of the market, the prestige housing market is going mental.
Yeah.
In Sydney. So there's 150 homes which are listed for sale at over 15 mil right now.
And I believe there was a figure around there's 40 properties listed over 30 million.
Yes.
So
there was 36 to be precise.
Okay.
Yeah.
So, and whether that's the prestige market going mental or there's just the prestige market, more people are selling because there's a lot of wealthy leaving Australia right now.
Correct. Are they cashing out?
Yeah.
Are they going, this place is too expensive?
Yeah.
I don't know what the reasons are, but that is some interesting numbers. There's literally the highest amount, no surprise, is Point Piper and Vaucluse. There's multiple listings there over 30 mil.
Yeah.
We've got dozens in Mossman. Again, no huge surprise. Double Bay, Bellevue Hill has got a lot in there as well. Some surprising ones is Newtown, Balmain are really starting to creep up well above that 15 mil as well.
It's, interesting to see, watch this space. Real estate agents would be absolutely making a fortune at the moment.
There's an interesting stat that I found was that there's actually officially more homes within 10, this is within a 10K radius of the CBD, Sydney CBD, there's more homes listed at over 15 mil than there is listed at under 800K. And that's for all listings, not just homes, but for apartments.
Yeah.
So you've got more chance of buying something over 15 mil than you do under. Bit of a shift over the years.
It would be interesting to see if that is wealth moving out of Australia or not.
100%, or whether people are downsizing, cashing out just to live better lifestyles. If you're very asset rich, now is probably a good time to cash that out.
Yeah, absolutely.
Last one that we're talking about today, and this is a really big one on the housing market, and it's not just affecting us today. These are figures that have been put forward by the government to achieve by 2029.
Yeah.
So they wanted 1.2 million additional homes by 2029, which equals around 240,000 a year. Now, last year we only delivered 170,000. So we're on track as it stands to come short by around 280,000 homes by then.
Yeah.
And we talked about it before. The average people in a house is 2.5, did you say?
Yeah, it depends on where you are, but on average it's 2.5.
So what are you going to do with 600,000 people?
Yeah.
That's why vacancy rates are so low in that rental market.
Yeah.
We saw, I think everyone probably saw that video in Bronte of people lining up for a two-bedder rental, and it was like a music festival line.
But there is a lot of money in institutional money moving into Sydney who are building these build-to-rent schemes and all of that sort of stuff. So it's going to be interesting with that saturation of really high dense unit market, similar to Waterloo, Zetland type areas. It's going to be interesting to see what happens in that space. But I would say that that's largely contributing to the building completion rates. And all of these areas that we do need family homes are left even shorter than what we're discussing here.
So some of the reasons builders are not building, so construction costs are still up between 30 and 40% between now and 2021.
Yeah.
So the costs are just too high. Consumers aren't willing to pay that.
Yeah.
I'm going through quotes at the moment to renovate, and then I'm looking at a knockdown rebuild, and I'm blown off my seat by half the quotes I'm getting.
And then you've got the unemployment rate so high, but then what's the unemployment relating to the construction industry?
Well, that's something to look at as well. So then there's obviously labour shortages because no one's around.
Yeah,
everyone's struggling.
I can't build houses yet.
Correct. So another thing that's interesting here is the council approvals. So some councils have blown out to 12 months to get an approval in place for a new build.
Yeah.
Why?
And
why is it that hard?
And a lot of people just see what building approvals, and a lot of the data that's out there is how many building approvals in terms of a supply metric. What are the building completion rates?
Yeah.
Because approvals is very different to completions.
Well, that's right. They don't proceed.
Yeah.
Because of the cost.
And then again, like the low to medium rise housing rezoning laws that happened in New South Wales, 121 suburbs that were included. I know myself because I own a property in one of those locations. It's not feasible for a developer to go and build a 6-story unit complex in some of these areas. So although that land has been rezoned strategically by the New South Wales government, you still can't increase density there because it's not feasible for a developer.
So the exact numbers are commencements are down 4.4% in the June quarter, and completions are down 6.5%.
Yeah.
So there's your answer. So basically, people are starting the process, getting to a certain point, and go, this isn't affordable.
Yeah.
And I think one of the obvious reasons for that as well is development finance is so expensive at the moment.
Yeah.
You know, they have to factor this into their total cost.
Absolutely.
And if that's a double figure amount, you know, if they're getting charged 10% or higher, then it's eating into their margins.
And for many people, if it's someone just doing a renovation, like a family, say, that's living in a 3-bedroom house, they've got a couple of kids now, they want to upgrade to a 4th, they might be getting quotes, you know, a couple of $100,000 to do a small extension. It's easier for you to just sell an upgrade to a 4-bedroom house.
Yeah.
You know, so it's not surprising that a lot of people just aren't going forward with any of their construction.
As I said, I went through the process, got a DA, started getting quotes for a full renovation, and it's looking like it's going to be cheaper to knock the place down.
Yeah.
It's just the cost. The cost is just ridiculous at the moment.
Yeah.
So I don't know how you fix that. You know, you would think some of these prices would have started to come down as the demand dropped.
Yeah.
You know, the building costs. Like I would argue that we are not in the same conditions that we were in 2021.
Yeah, absolutely.
Where the shipping lines are all operating again. Yeah. We've got access to all these things. I think it's corporate greed in a lot of cases where they've hiked their prices up because the demand was so high during COVID. Now, and they've scaled, they've increased all these size of their companies. It's hard for them now to justify to bring the prices down.
Yeah,
and it's just buckling everything. And until things start to completely fold, then they're not going to change those prices.
Yeah. I would say the local small builders are selective with their jobs because who knows, you know, from that Sydney market, a lot of these top properties are over $15 million. They're probably fully renovated. Potentially they've construction companies who have been working on them, which is then labour shortage for, you know, the average Australians.
And that's a good point as well. Lenders require you to have a fixed price building contract for obvious reasons.
Yeah.
But then for a builder that's going to be quoting something that could take 18 months, are they going to, they need to factor that into it.
Yeah.
So that's why these fixed price building contracts are high too, because they need to protect their business, which makes complete sense to me.
Yeah.
But the end result is higher building costs as well.
Because there you go, you've got a builder who might have just not a fixed cost or have a fixed cost, but then unemployment rates rise, consumer confidence decreases, and then the builders as well, like, fuck, now my costs have gone up.
Correct. And they wear that because it's a fixed price building contract. And that's why we saw so many builders fold around that end of COVID, because it was just so much demand. They were locked into contracts in pre-COVID prices and they had to complete them in COVID prices, which were 30-40% more expensive. They couldn't handle it.
Yeah.
So I think a lot of builders are factoring that in now. They don't want to have a repeat of that.
Yeah.
But at the same time, it's making it very difficult to meet this $1.2 million or 1.2 million houses, by 2029.
So building completions down. There's a bunch of expensive properties to sale if anyone's got the money, and unemployment's absolutely tanking. So take away whatever you want from the episode.
Bit of a cluster.
It's pretty complex that mix up.
It's just stuff that people need to be aware of.
Absolutely.
You need to be aware of these things. I wouldn't stress about these things. It's out of our control as a consumer.
And that's the thing. You know, a lot of this stuff is just, it doesn't matter. The world moves on.
Correct.
And, you know, property continues to do its thing.
Yeah, I think we keep buying, keep holding, don't stress about it too much, but these things are going to affect property prices.
Absolutely.
Yeah. That's it for today.
See you on the next one.